All right, let's just jump right into this. I want to run a little thought experiment with you. And look, this isn't about scaring anyone. It's really about getting our heads around the hidden mechanics of money, and maybe more importantly, trust.
No, really, just take a second and actually picture this. You wake up one morning, everything seems normal. Your job is still there, the stores are still open, but the cash in your bank account, the money in your wallet, even your next paycheck, suddenly it's worth a lot less. Like a whole lot less. And the crazy part is, this wasn't caused by a war. There was no huge cataclysmic event you can point to on the news. No government official came on TV to prepare you for this. It just sort of happened.
That's because the thing that disappeared wasn't physical at all. It was something way, way more fragile. It was confidence.
And this is absolutely the crucial point. When you look back through history, these kinds of currency events don't creep up on you over years. They happen all at once, when that belief, that confidence finally shatters. So to even understand if something like this could ever happen, we've got to look at how it happens in the first place. What's the anatomy of a currency collapse?
You know, currencies don't die because the paper disintegrates or the digital ones and zeros get deleted. They die because our collective trust in them just evaporates. At the end of the day, money is just a shared belief system.
So this really breaks it down perfectly. Think of any currency as being held up by these three pillars of trust. First, you have to believe it'll hold its value, right? Second, you trust that other people will actually take it as payment. And third, and this is the big one, you have to believe the government is being responsible with it. You can probably see where this is going. If that third pillar starts to crack, the whole thing gets real wobbly real fast. And if you look at history, the pattern is shockingly consistent. Think about Weimar Germany in the 1920s. Prices doubled every few days. Or Zimbabwe in 2008, where they were doubling every 24 hours. The sequence laid out right here is almost always the same. It kicks off with massive government debt, which leads to money printing to pay the bills. Naturally, that devalues the currency, so prices surge. And then finally, people see the writing on the wall and they rush to trade their melting cash for anything real. Land, gold, whatever they can get their hands on. And this quote just brilliantly illustrates that tipping point. It turns into a self-fulfilling prophecy, doesn't it? It's like a stampede for the exits, where the value gets trampled not because the currency is already worthless, but because everyone suddenly believes it's about to be.
Okay, so now we get to the uncomfortable question. How does this all connect? Could this pattern ever apply to the US dollar? It's so easy to just dismiss that idea, but we really need to look at the pressures objectively.
Now, of course, the dollar is not the currency of Zimbabwe. It has this huge, massive advantage being the world's reserve currency. As you can see here, global commerce pretty much runs on dollars. And that creates this constant, built-in demand that no other currency has. But that doesn't make it immune to the basic laws of trust and value. And when we go back and look at that historical pattern, well, some of the warning signs are there. This chart, for instance, shows the absolutely dramatic expansion of the US money supply. This lines up perfectly with step 2 in that pattern we just talked about, accelerated money printing.
So the crucial thing to see is that all these pressures are linked. The rising debt leads to higher interest payments, which creates a huge incentive to, well, create more money. And while that's happening, you've got other countries slowly and quietly moving away from holding so many dollars. Any one of these things on its own might not be a crisis, but you put them all together and they start to test that very fragile foundation of confidence.
And let's be super clear about something. When we say collapse, we're not talking about the dollar going to zero overnight. That's not how it works. What we are talking about is a rapid and probably pretty painful loss of its power on the world stage. And even more importantly for us, a massive hit to its purchasing power, what your dollar can actually buy.
So what would that day actually look and feel like? I mean, it's not a Hollywood apocalypse movie. It would be an economic one. And it will create this massive and very sudden transfer of wealth.
You'd probably see it first in the financial headlines. Emergency Fed meetings or chaos in the bond markets as investors start to lose faith. Then you'd start to feel it when the stock market halts trading to stop a panic, or when your bank suddenly limits how much cash you can take out. And you would definitely feel it at the grocery store and the gas pump when prices start changing by the week instead of by the year.
In an environment like that, a really clear divide starts to emerge. The folks holding real things, hard assets, or people with debt that basically gets inflated away, they tend to weather the storm. But the people who did the responsible thing, saving cash, living on a fixed income, they get punished the hardest. See, this isn't really about panic. It's all about positioning.
And that brings us to the last, and honestly the most important question. This isn't about predicting the future. It's really a test of your own financial resilience.
So forget 40% overnight. Let's make it more plausible. A 30% drop in purchasing power over a single year. Just look at your own finances right now. Would that be a total catastrophe for you, or would it be a manageable event? The answer to that question really tells you everything you need to know.
Because at the end of the day, history is undefeated. No reserve currency lasts forever. From the Roman denarius to the British pound sterling, systems that feel permanent are in fact always temporary. The dollar's dominance? It's less than a century old.
So the big takeaway here isn't that you should expect doom and gloom tomorrow. The takeaway is that these systems are fragile, and that confidence, once it's lost, is almost impossible to get back. The key isn't trying to predict the exact day. It's understanding the pressures so you can position yourself for a future that will, inevitably, look different than the past.